Hi everybody, this is Lara at Elliott Wave Gold with your end of the week video analysis for the week ending Friday 3rd of August. Again, a low could be in place, but we can have confidence with this really only with a new high now above 1265.59. I'm expecting a strong bounce up. We've had a break below support. I'm expecting now a throwback to test resistance. The target is about 1304. If that's wrong, it might not be quite high enough. This may be reached in a few weeks. I expect the bounce is going to be a three-wave movement, and so halfway along I expect we're going to see some consolidation. Let's take a look at the wave counts first. I'm going to go over all four remaining weekly charts at the end of this week so we can see if there are any differences or what the similarities are between them. My wave counts see cycle wave A over at this big low down here in December 2015 and a cycle degree B wave beginning here. Now the reason why we have so many alternates is it's a B wave. There are more than 23 possible corrective structures that B waves can take. Of all the Elliott waves, it's B waves that exhibit the greatest variety in structure and price behaviour. They are really difficult to analyse and very difficult to trade. This one has proven over the last year or so to be no exception, unfortunately. It's usually not only until they're complete, and sometimes even after they're complete and subsequent price action shows they're complete, that you can be confident of what structure a B wave was. At this stage, it looks most likely our B wave is a triangle, a regular contracting triangle, which is the most common type of Elliott wave triangle. 4 of the 5 subwaves of a triangle must be simple ABC structures. 4 of the 5 subwaves must be zigzags or of the zigzag family. Only one of the triangle subwaves can be a multiple, and that's most commonly wave C. And so this wave count follows a very common pattern, and within it, most common structures. So we have a zigzag for A and B, a double zigzag for C. Here's our multiple, the most common triangle subwave to do so. And now a zigzag down for D. Looks again like it could be over. A couple of weeks ago, I expected it could be over down here, but we did allow for an alternate Elliott wave count that allowed for a bit more downward movement. The main was invalidated this week, and the alternate was correct. The final target I had calculated for it, price has fallen over $8 short of that target. I expect though that D is over here or very soon, because the BD trend line should have a pretty good slope. For this triangle, the AC trend line slope is quite shallow. For Elliott wave contracting triangles, the triangle trend lines should have a reasonable rate of convergence so that it has a normal look. If D were to end down here somewhere, the triangle trend lines, they wouldn't be parallel, but they would have a very slow rate of convergence. It just wouldn't look like a normal Elliott wave triangle. And so I expect D is going to end around about here. And here it's somewhat close to 0.618, the depth of primary C. And again, one of the 5 subwaves of a triangle is usually fairly close to that point. So it could be D, because this gives the triangle a really good look. And so I'm expecting that D is quite likely over here, and now we're going to see a zigzag, a final single zigzag up for E, subdividing 535 for E to fall reasonably short of the triangle AC trend line, because that's by quite a wide margin the most common look for an E wave of a triangle. Within wave E, we'll see a B wave, so we'll be seeing a B wave within an E wave. This is going to be a very complicated, choppy, time-consuming consolidation, or equally as likely, it could be a brief, sharp pullback. E waves of triangles are usually the most brief triangle subwave. When wave E completes a triangle for cycle B, if this all unfolds as the Elliott wave count expects, then we'll be expecting a cycle degree trend change for gold and a new huge downward wave to last 1 to several years to move probably quite a lot below this low here for cycle wave C. We're not there yet. We still need cycle B to complete, but it's getting a lot closer. It may complete this year. It may complete in another couple of months possibly. Primary E of a triangle may not move beyond the end of C, not even a tiny fraction. No high by any amount at any time frame is allowed for this wave count above 1365.68. That invalidation point is black and white. Let's take a look at the structure of intermediate wave C now. It has to be a 5-wave structure. It's very obviously not an ending diagonal, and so the only other structure possible is an impulse, and that's the most common structure for wave C to be. So beginning up here, we have what looks like a really obvious 5-wave impulse for minor 1, a double zigzag for minor 2, an impulse for minor 3, very importantly, is shorter than minor 1. A single zigzag for minor 4 is somewhat out of proportion to minor 2 and doesn't exhibit great alternation. There's alternation in depth. There's very little alternation, in depth, and there's only a tiny bit of alternation in structure. And now minor wave 5 can be seen as complete. It could be over down here, and within it, minute wave 4 may have subdivided as a double flat, minute wave 2 a quicker single zigzag. Minor wave 5 may have ended at Friday's new low almost perfectly at the lower edge of this Elliott channel at the 1-3 trend line. And we've seen a really strong bounce up and some strong upward movement. When you look at it at the hourly chart, there's some very strong green candlesticks there. This is a piercing pattern at the end of the week, and so that's a bullish reversal pattern, and while it comes with oversold extreme conditions, it should be taken reasonably seriously. Now, it doesn't mean we have to have a low in place here. It could be a warning of a low approaching very, very soon. My target for primary wave E at this stage is for it to reach 0.618, the length of primary D about 1034. We do have some very strong resistance ahead, about 1035 to 1310, so if this target is wrong, it may not be quite high enough. Primary E is expected to be a zigzag, subdividing 535. When we have wave A and B within it complete, I can then use the Fibonacci ratio between A and C at intermediate degree to calculate a target at intermediate degree. So at that stage, this target may change or widen to a small zone. At the hourly chart level, here's the end of minute 3. Here's the double flat for minute 4. Sorry, it's a double combination, not a double flat. 535 zigzag for minuet W, the double joined by a 3 in the opposite direction labelled X, and a 335 flat for minuet Y completes a possible double combination here. If minute 4 ends here and minute 5 begins here, then it's Friday's low. There's a complete 5-wave structure for it. This is what I explained at the daily chart level. We've got some extremely strong green candlesticks. There's a very strong upward bounce during Friday's session. This could be our first wave of the new upward trend. It does look very bullish. Second wave correction may not move beyond the start of the first wave, below 1204.69. We can have reasonable confidence that we have a low in place if we see a new high above 1265.59. At the weekly chart level, this is the second idea for cycle wave B. It doesn't have to be a triangle. It could be a flat correction, subdividing 3, 3, 5. Within the flat correction, wave B must make a minimum 90% retracement of wave A, so it has to reach down to 1079.13 or below. At this stage, primary wave B hasn't done that. This low down here is not at 1079.13 or below, so we can't label primary B over here. And so primary B should be continuing if cycle B is a flat correction. Let's look at primary B. It could be a flat correction, subdividing 3, 3, 5. Intermediate C needs to move beyond the end of A, and it needs to reach below this minimum requirement. We can have reasonable confidence in this idea at the weekly chart level if the triangle is invalidated with a new low reasonably below 1123.08. Intermediate C has to be a 5-wave structure. We could have minor 1, minor 2, and now minor 3 could be over. We could be seeing a more brief and shallow bounce, which could be a 4th wave at minor degree within an ongoing developing downward impulse. And so this wave count expects some bounce. It still expects a low is probably in place down here for Friday's low. It expects a bounce upward next week for a shallow consolidation for a 4th wave. Wave 4 may not move into wave 1 price territory above 1307.09. And so we could possibly have what could look like the end of our triangle, and this wave count could remain valid. So we could have some uncertainty still with more alternate wave counts, a wave count that could see a triangle complete for cycle B, and running alongside it as an alternate, a wave count that could see cycle B continuing even further as a flat correction. At the beginning of this video, I think I said something like, it's almost impossible to tell exactly what structure your B wave is until it's complete, and sometimes even after it's complete, for some time after, it's impossible to tell with any level of certainty what structure it was, and even if it was complete. This wave count, however, does not diverge in expectations of direction. We expect a bounce or consolidation, and then we expect more downward movement. The main wave count expects a bounce or consolidation. It just expects it to be more time consuming, and it doesn't have this invalidation point. When wave 4 is over, this wave count would then expect more downward movement for an extended fifth wave. At the weekly chart level, this is another idea for cycle B. It could be a double combination. The first structure in the double could be a complete zigzag, labelled primary wave W. The double is joined by a 3 in the opposite direction, labelled X. This is a zigzag, the most common structure for X waves. Primary wave Y would then be expected to be very, very likely to be a flat correction. Within double combinations, the combination of one zigzag and one flat is by an extremely wide margin the most common of the two structures. So let's expect a flat for primary Y to subdivide 3, 3, 5. Within the flat, intermediate B needs to reach a minimum 90% the length of intermediate A at 1147.34, so it needs to reach that point or below. Intermediate B may make a new price extreme beyond the start of intermediate A down here. This wave count expects now we're looking at a fourth wave correction, so it still expects some consolidation or some bounce. It still expects that we've got a low in place. And so how time consuming and how high this bounce goes is going to start to give us some idea of which of these wave counts at the weekly chart level could be correct. They all expect some upward movement, but the first main wave count for the triangle expects quite a lot of time consuming, choppy, overlapping upward movement. The other two expect the upward movement to be more shallow and more brief. For this idea, intermediate B has to be a three-wave corrective structure. It could be unfolding as a zigzag, A, B, and C an impulse with 1, 2, 3, 4, 5. 4 may not move into wave 1 price territory above 1262.50. At the weekly chart level, this is the last idea for cycle wave B. It could be a double zigzag. We could have the first zigzag in the double labelled primary wave W. The double could be joined by an incomplete corrective structure in the opposite direction. Primary X could be a regular contracting triangle. Within double zigzags, X waves are usually brief and shallow. But the most important of those two conditions is that they should be shallow. They are almost always very shallow. Not always, almost always. They're almost always quite brief, but sometimes they can be time-consuming triangles. So this doesn't follow a very common pattern, but it certainly meets all Elliott wave rules. It's just not the most common scenario, but let's consider all possibilities. And so if we have a double zigzag for cycle B, it should have a strong slope against the prior trend. That's why the X waves are usually brief and shallow. In order for it to achieve that normal look and a strong slope, primary Y, when it gets underway, would be expected to move substantially above the end of primary W. Of all the wave counts at the weekly chart level, this is the most bullish wave count for the long term, but not the short or not the medium term. It still needs to see the triangle for primary X complete, and it can't be seen over here. If it begins here, we have a zigzag for A, a double zigzag for B, not the most common triangle subwave to subdivide as a multiple, which is another reason why this is an alternate and why that first triangle wave count is preferred. But we could have the double zigzag for B, that can happen. A single zigzag for C could be over here. Now we'd be looking at quite a big bounce for intermediate wave D to subdivide as a single zigzag, and so quite a lot of upward movement, subdividing 5, 3, 5, a zigzag, pretty much exactly the same as what's expected for the main Elliott wave count. When that's done, a final zigzag down for E, and then an upward breakout from this huge consolidation would be expected. And so it's not for some months' time that this alternate idea is going to start to diverge from the main wave count. It could remain an alternate for quite some time. At this stage, there's no divergence in the expected direction for any of the wave counts. They expect upward movement for at least 1 to 3 weeks and probably quite a bit longer than that. Let's take a look now at some classic analysis. I'm not going to go over all of those wave counts, or rather, I'm not going to publish them every day. I'm only going to publish that triangle, and periodically we'll review all 4 of them just to see if there's any divergence. At this point, there isn't much at all. Well, none in terms of expected direction for next week anyway. At the weekly chart level, a new candlestick for gold for stock charts data has not made a new low below this point here, but for bar chart data it did. Gold is a truly global market, and no one data feed is going to use all data points from the entire globe, and so you are going to have variances in different data feeds. That's a fact that we simply have to accept. We can't change it, so we have to work with it. We don't have a new low here. We've got a balance of volume upward and volume is declining. The market this week fell of its own weight. This is nearly a spinning top candlestick. At the weekly chart level, this looks indecisive. Ever so slightly, possibly bullish, but mostly neutral. On balance volume, though, still has this not very strong but somewhat reasonable bearish divergence, and this may support that main Elliott wave count. That doesn't preclude some upward movement and consolidation here to back test prior support, which is now strong resistance at 1300 to 1310. But overall, it expects where on balance volume leads, price may follow. So overall, it expects new lows below this point back here, which is quite substantial. ADX is telling us that we still have a downward trend in place at the weekly chart level. It's a lagging indicator. The trend is not yet extreme. It's not above 35 and it's not yet above both directional lines. So there's still further room for this downward trend to run at the weekly chart level. ATR is quite flat and has been declining substantially for quite a long time. This too supports the idea of a B wave and possibly even the idea of a triangle. Triangles should have declining momentum and declining range, particularly toward the end. So this offers a little bit of support to the triangle idea. RSI is still neutral, not yet oversold. There is still room for the downward trend to run, but stochastics is oversold and exhibits single bullish divergence with price at prior lows. At the daily chart level, the shorter term picture is slightly more bullish. We've got a nice piercing pattern here. We don't have a new low for stock charts data, but we've got a green daily candlestick closing well within the prior body of the previous day's candlestick. During Friday, the balance of volume was upward. The candlestick closes green. Upward movement within the session does have support from volume. Support from volume plus a piercing pattern, while conditions are extreme and oversold at the daily chart level anyway, tells us it's a warning to look out. A low could possibly again be in place here. ADX is again increasing, telling us that we again have a downward trend after these 3 days of downward movement, but the trend at the daily chart level is very extreme. It's both above 35 and above both directional lines, and so when the trend becomes very extreme, we should be looking out for candlestick patterns and indications of an end to that trend, and we've got that on Friday, so look out for that. And that supports the main Elliott wave count. It's pretty much one reason why I'm expecting a low in place. On balance volume was very bearish as it made a new low here. It's pretty much at the same level for Thursday though. It's made a new low 6 sessions ago. Where it goes, we should expect price to follow. At this stage, my main wave count's expecting quite a lot of upward movement, pretty much an end to the downward trend, and so on balance volume is mostly contradicting that. It doesn't really support the main Elliott wave count. It may actually be more supportive of one of those alternates that expects a little consolidation here before a continuation of the downward trend in a more timely fashion. than that main wave count expects. So that's one reason why I am at the end of the week, and I'll probably do it about once a week or so, I will again cover all of those wave counts at the weekly chart level for you. Keep them in mind. Just because I'm going to publish one on a daily basis doesn't mean that has to be the right one. It's a B wave. We have to take alternates into consideration quite seriously. ATR is overall flat. This downward movement is actually quite weak, supporting the idea that it's part of a larger correction and not the start of a new, really extended and strong trend. This trend does have some weakness. Stochastics is neutral. It's reached oversold down here, and it had pretty good bullish divergence with price to this low. Stock Charts data doesn't have a new low down here, and Stochastics is back right up into neutral territory. There is again room for price to fall. It could also be that we had lows in place here for Stock Charts, and it's now going to move up and away as the trend was very, very extreme indeed. Bollinger Bands holding steady and starting to contract as prices essentially moved sideways for several days tells us that this is probably a consolidation. Now, it could be a consolidation within an ongoing downward trend, but we have to be careful of that idea now because we're seeing very extreme readings from ADX. And MACD had a bullish crossover a few days ago. That's all from me with your gold analysis. I hope all our members are having an awesome weekend.